Hi, I'm Satyam. Today, the Indian stock markets experienced modest gains, showcasing resilience amidst a backdrop of mixed global cues and cautious investor sentiment. The BSE Sensex ended the day at 81,785.56, marking an increase of 73.80 points, or 0.09%. Meanwhile, the Nifty 50 index also gained, closing at 25,052.35, up by 34.60 points, which is a 0.14% increase. However, the Nifty Bank index saw a dip, falling by 134.90 points, translating to a decline of 0.26%, to close at 51,143.85. The Nifty index, which has seen a steady rise over the past 10 sessions, gaining 3.8% during this period, came off a record high today. The dip can be attributed to profit booking across various sectors, which tempered the overall market gains. Despite the profit booking, certain segments, particularly information technology and pharmaceuticals, showed strength. The IT index rose by 1.64%, and the pharma index increased by 1.14%. This positive movement in IT stocks can be largely attributed to expectations of an imminent rate cut by the U.S. Federal Reserve, which has buoyed sentiment in sectors heavily reliant on global economic conditions. Indeed, the IT sector has been a standout performer this week, gaining 3.2%. This rally has been fueled by remarks from Federal Reserve Chair Jerome Powell, who signaled that a rate cut is likely at the central bank's upcoming September meeting. Such a move by the Fed is expected to lower borrowing costs and stimulate economic growth, indirectly benefiting IT companies with significant exposure to the U.S. market. Pharmaceutical stocks also benefited from the broader positive sentiment, indicating investors' preference for sectors perceived as more defensive amidst global economic uncertainty. The combined strength of the IT and pharma sectors contributed to the market's resilience today, helping to offset declines seen in other areas. Out of the 14 major sectors, 6 logged gains today, showcasing the market's underlying strength and sectoral diversity. However, the financial sector, which holds the most significant weightage on the Nifty index, experienced a decline of 0.24%. The drop in financial stocks reflects investor caution, particularly as markets approach key economic data releases. Financials have historically been more sensitive to macroeconomic indicators and central bank policies, making them susceptible to volatility ahead of such events. Despite these mixed performances, the overall market momentum remains positive, supported by a sustained liquidity surplus. The steady inflow of funds from local retail and institutional investors, as well as money coming in from portfolio management services and alternative investment funds, has played a crucial role in maintaining this liquidity surplus. This influx of capital has provided a strong cushion against any potential sell-offs and has been a key driver of the market's upward trend. The continued support from domestic institutional investors underscores the strong underlying confidence in the Indian market's growth prospects. Foreign institutional investors, FIIs, were net sellers today, offloading 1,347.53 Indian rupees crore worth of shares in the cash segment. This contrasts with the buying activity from domestic institutional investors, DIIs, who were net buyers, injecting 439.35 Indian rupees crore into the market. The divergent behavior between FIIs and DIIs is indicative of differing perspectives on market valuations and near-term risks. While FIIs may be booking profits or reallocating capital amid global uncertainties, DIIs continue to show faith in the long-term potential of the Indian economy. Looking forward, market participants are eagerly awaiting key economic data releases that could shape future market directions. U.S. inflation data is due to be released, which will be closely monitored by global investors for insights into the inflationary pressures facing the world's largest economy. Inflation figures will be critical in determining the Federal Reserve's future monetary policy stance. A higher-than-expected inflation reading could temper expectations of aggressive rate cuts, which may lead to volatility in global markets. On the domestic front, India's GDP data is also set to be released soon. This report will provide valuable insights into the country's economic health and growth trajectory. Strong GDP growth figures would reinforce the positive market sentiment and support continued investments in Indian equities. Conversely, any signs of economic slowdown could prompt a reassessment of market valuations and growth expectations. In conclusion, today's market performance highlights the delicate balance between optimism driven by expectations of a U.S. rate cut and caution stemming from profit booking and global uncertainties. While sectors like IT and pharma continue to show strength, providing a buffer against broader market declines, investor caution is evident, particularly in financials. The ongoing liquidity surplus, supported by sustained domestic inflows, remains a critical factor underpinning market resilience. As we move forward, market participants will closely watch the upcoming economic data releases for cues on future market directions. The anticipation of potential rate cuts by the U.S. Federal Reserve and the insights provided by India's GDP figures will play a pivotal role in shaping investor sentiment and market performance in the near term. Until then, the markets are likely to navigate a path of cautious optimism, underpinned by strong liquidity and selective sectoral strength. This video is made for educational purposes only. Please don't make any investment decisions based on it. If you like the video, please like, share, and subscribe. Thank you.